It is a summary of all the business transaction which is related to a person, individual, firm or industry. In accounting, you are going to record only the monetary transaction, all the transaction which can be measured in terms of money or money's worth. It gives the detailed information about all the expenses and the income, and it gives the results, profit or loss. Hello everyone, I am Meghna from the Department of Commerce, lecturing in Vidhyaashram First Grade College, the Temple of Excellence. We are in the session 1 of Unit 1, subject Accountancy. In today's session, we are going to discuss the meaning of accounting, objective and importance of accounting. As it is the first session of yours, so in this session, we are going to learn all the basics of accounting. First, introduction. First, what is an account? What is an account means? Account is a summarized business transactions related to a person, firm or industry to know the profit or loss. Account is a summarized business transaction. It is a summary of all the business transaction which is related to a person, individual, firm or industry. That means account is a summary of all the transaction. Why? Because you prepare an account in order to know the profit or loss earned from the company or from a particular transaction. To know the profit or loss earned by a company, you are going to prepare an account. So, you will get all the summary of transaction. So, you get all the summary of business transaction. Accounting is generally termed as a language of business. It's a language of business throughout the world. It records, classifies, analyzes and communicates all the business transactions that have taken place during a particular period. It is a system of recording and reporting business transaction in financial terms to interested parties. That means it records all the transaction, it classifies and it analyzes and communicate the information. That means account, it records all the transaction in a particular period. For example, in one financial year, all the transaction that taken place in the business. You'll record all the transaction, then you'll summarize the information, then it communicate, it gives the information whenever you want. So, it records, classifies, summarize and it gives the results for the interested parties. That means the company, the management level, they need the information about all the transactions. So, accounts communicate the information whenever you need it. Whenever there is a need for information, so account will give the detailed information about all the transactions for a particular period. For a particular period. It is a language of business. So, accounts is a language of business. Mainly business is run in order to make a profit. In order to make a profit, you run a business. So, it gives all the information. It is a language of business. Next, accounting is a process of identifying, measuring, recording and communicating the required information related to economic events of an organization to the interested user of such information. Accounting. Account is a summarized business transaction. Accounting is a process of recording all the transaction. According to the process, you are going to record all the transaction. Account is a summarized business transaction. Accounting is a process of recording all the transaction. First, you need to identify. In accounting, you are going to record only the monetary transaction. All the transaction which can be measured in terms of money or money's worth. In accounts, you'll record only the monetary transaction. So, you need to identify. First, you need to identify monetary transaction. In business, both the monetary transaction as well as non-monetary transaction has taken place. So you need to identify only the monetary transaction. Then measures and recording. After identifying, you need to measure and record. There is a systematic way to record all the transaction. There is a systematic way to record all the business transaction and measuring. Then communicate. After identifying, measuring and recording, it needs to communicate with the interested user. It needs to communicate the required information. According to the requirement of the user, you need to communicate the accounting information. Organization to the interested user of such information. That means the management needs financial information in order to take the decision. So you need to communicate with the interested users according to their requirements. Accounting gives only the financial information to the interested user. It gives all the detailed information for a particular period. So accounting is a process. Then definition. According to American Institute of Certified Public Accountant, which defines accounting as the art of recording, classifying and summarizing the significant manner and in terms of money transaction and events which are in part at least of financial character and interpreting the results thereof. That means according to American Institute of Certified Public Accountant, which defines accounting as art of recording. That means it is an art of recording. That means a systematic way. In a systematic way, you need to record all the transaction. So, if you record all the transaction in a systematic way, it is easy to get the information or easy to know. So, there is an art of recording and classifying. Classifying means you need to classify between the monetary transaction and non-monetary transaction. First, you need to collect the information. Then you need to identify, classify the monetary and non-monetary transaction. Then summarize all the business transaction. Summarize all the monetary transaction in a systematic way. In a systematic, that means significant manner. In terms of money transaction, only the money transaction should be recorded in accounts. At least in part, money transaction or which are in part at least of financial character. Money or money's worth transaction should be recorded and interpret the results from the transaction whether you earn the profit or loss. So, you should interpret the results to know you are in profit or in loss. So, you prepare all the transaction, you record all the transactions and prepare a final account in order to know only you are in profit or loss. The final objective of preparing accounts is to know the profit or loss. So, you need to interpret the results. You need to interpret the results from the transaction. So, accounting is a art of recording, classifying, summarizing in a significant manner and in terms of money or money's worth. For example, money transaction only should be recorded in accounts. The appreciation from the top management for the workers, it's not involving any monetary transaction. So, you cannot record the transaction in accounts. So, even it is related to business, but you cannot record the transaction in accounts. So, only the monetary transaction. For example, you purchase from someone. So, you purchase from XYZ company or you sold to XYZ company. It involves money transaction. So, that transaction can be recorded in accounts. Only monetary transaction should be recorded. This is definition of accounting. Next, objectives of accounting. The objectives of accounting is to keeping systematic records. That means it helps in keeping a systematic records. If you maintain accounts in a systematic way, it acts as a record. So, you'll get all the transaction for a particular period. You get all the transaction for a particular period in a single book. So, it keeps systematic record. Whenever you want the information, you can get easily. Whenever you want, you can get easily all the information related to your business. So, it helps to keep the systematic record. Accounting helps to keep a systematic record. To ascertain the results of operation. To ascertain the results of operation means you made a purchase or sale. So, from that purchase or sale, from that transaction, you earn profit or loss. What is the result from the transaction? Every business run with the intention to make profit. So, to know the results, from the operations, from buying and selling activity, you made a profit or loss. To know that results, accounting helps. So, it interprets the results and it gives the results from operations. Next, to ascertain the financial position. As accounting records only the monetary transaction, it gives the financial position of your company. It gives the financial position of your company. So that the financial position, it gives idea about the future. So that from the financial position, it helps the management to take the necessary decision. The cash or the assets, what they have, and the liabilities that need to pay. So, it gives information about the financial position. It ascertains the financial position of the company. Next, to portray the liquidity position. To portray the liquidity position, that means present cash in hand or the liquidity. Liquidity means easily convertible into cash. Liquidity means easy to convertible into cash. So that the liquidity position, in order to meet the uncertainty, the liquidity of your company, the liquidity position, cash in hand or the liquid cash with your business, it portray the liquidity position. Next, to protect the business property. To protect the business property means from the transaction, for example, you made some transaction, purchase or sell. At the time of transaction, you are not going to pay money. So, you have a liability to pay somebody, but you have paid after some days. Accounting gives the information about the payment or receipt. It protects your business property. When you have a evidence for the payment or the receipt, they cannot mislead you. So, you have a receipt and you have a voucher or you have a payment bill, so that nobody can mislead your business, and it protects your business property. It protects your business property. Accounting gives full detailed information so that nobody can mislead your business. It protects your business property. Next, to facilitate rational decision making. To facilitate rational decision making, accounting gives information, all the financial information, so that you take a necessary decision. That means the cash, what you have, or the assets and the liability, it gives the financial position and the liquidity position of your business. To meet some business activity, you need money. It gives information about your financial position so that you take a decision, you take necessary decision. Decision has to be taken faster. So, when you have all the information about your financial position and the liquidity position, it helps the management to take decision quickly. So, it helps in rational decision making. According to the needs, you can take decisions. So, it facilitates rational decision making. Accounting helps in all these needs. So, it gives systematic records and it ascertains the results, and it gives the financial position, and it portrays the liquidity position. It protects the business properties, and it facilitates in decision making. These all are the objectives of accounting. Next, importance of accounting. Importance of accounting to various users. Accounting is important for different categories. Accounting is used for various uses. So, it is needed for various uses. Such uses are: first, owners. How accounting important for owners? For owners, accounting is needed to know the profit or loss earned from the company. So, to know the profit that they are earning from the business, accounting helps. So, accounting give detailed information about all the transaction, and finally it gives the results. It interprets the results and it gives whether you are in profit or loss. So, it helps the owner to know the amount of profit they earn in a particular period or loss suffered from the period. So, it gives the detailed information about the all the expenses and the income, and it gives the results, profit or loss. Next, to management. Management need financial information to take the decision. To take the decisions like whether your company is lack of finance means they can borrow from others. So, it gives the information, financial information to take the necessary decision, to manage the available resources and to take the decision about the finance. Accounting is important, so that accounting give detailed information so that the amount spent for the various purpose, and the amount collected from the different sources, it gives information and they can take the necessary decision. Management, for management to take the decision, accounting helps. So, accounting is useful for the management to take the decision, to take decision. For the owner to know the profit or loss. Next, creditors. For creditors, it gives the financial position of the company. Accounting gives the financial position of the company. From that, they can decide whether the company have the ability to repay the credit or not. From that, they can make a decision. They take a decision whether to lend money or not. For lending the money for the company, they need financial position of the company. They check the background of the company and the profit or the loss suffered from the past period. So that based on that information, they take a decision whether to lend money or not. For creditor, to know the financial position, and the ability to repay. Ability to repay your loan. Creditors check the ability of repaying the money. When your company is running in loss, you cannot repay your debt. So, the creditor, to decide whether to lend or not, they check the financial position and the ability to repay your loan. It helps the creditor to make decision about lending money. Next, for employees. For employees, it gives the information about the profit or loss earned from the company, so that they will get to know about the salary. They think employees, they work for salary. Whether company in the position to increase their salary or not. They know the information about their salary. As well as the retention of employees. Whether they have a long-term employment in this company or not. They know about the salary and the retention of employees. Their job security. They check job security with the company. Account gives information about the salary and the job security with the company. And investors. For investors, it gives the information about the return from their investments. For example, for the shareholders, how much dividend they are paying from the past few years, so that based on the returns they can make a decision whether to invest in company or not, whether to maintain the same investment or they can increase their investment. To make the decision about the investment, it gives the information about dividend or returns. For the investors, they check about the returns on their investment. Based on the returns, they take a decision whether to increase the investment or to decrease the investment or to maintain with the same investment. So it helps for the investors. Then government. For government, they check for the tax purpose. They know the profit and all the transaction to know the profit or loss. Calculate the taxes. For government, for tax purpose, accounting is important for the government. Next, for consumer. For consumers, it helps to know the margin of profit and the cost of production. And margin of profit. To know the margin of profit and cost of production, accounting helps for the consumers. So, accounting is important for the various user in a different way. So, from the owner till the consumers, the need for accounting is different, but accounting is important for all the users. So, it gives different information for the different users according to their requirement. It gives records, it gives information for the different users. This is all about the importance of accounting to different uses, to various uses. As this is the first session, we just discussed the basic of accounting, meaning of accounting, objective of accounting and importance of accounting. This is the basic session to know the basic thing about accounting. In this session, we just learn about the meaning and definition of accounting, then objective and importance of accounting. This is all about today's session. In the next session, just we are going to discuss about all the accounting terms, like what is asset, then liability, then creditors, debtors, capital, goodwill, the various terms which we are using in accounting. Let us discuss in the next session. Thank you.